We're watching our play, and as we see, we're coming clearly into support. But how do we know when the trend is flipping? How do we know to make money? What if there was an indicator that pointed us in the direction the entire time? Look, I'm here to tell you there's not a perfect indicator, but this indicator is going to change the way we trade. And when you watch any of my videos, this is one of the best indicators that helps you understand the trend, give you a little bit better with entries, but ultimately let you know when it's time to start trimming that position. I get a lot of questions about risk to reward and understanding when enough is enough. And I'm telling you right now, anyone and everyone who followed and watched the 9 EMA, it's changed their life. Let's get into it. Now we're going to do this for TradingView because this is the easiest way to teach off of, but this is going to be able to be used on any broker and any platform. So there should never be an issue. There's no secret indicator or secret sauce. You go into indicators, type in EMA, obviously it's right there. It's going to give you the baseline one. Now, typically it'll just give you the 9, but if you go into settings, we're going to just link it to our chart. Obviously keep it on the 9, and that's all we really care about. Now we're going to go into style, and I like this to always be red on my chart, and I have specific colors for every indicator. The VWAP is always blue. The 200 SMA usually remains yellow. That's for me. So for this, I always use red, and I recommend doing that if you watch me a lot, so it's really easy to understand if you see it on my chart, because that thing is always going to be a constant. And from there, it's going to be set up, and you can go over to any other chart and it will also be there, so you'll be able to see it that easy, that quick. Now, before we go head first into exactly what we're going to be covering, I'm going to tell you right now, we're going to go over some examples along the way, and then I'm going to break down the entries and exits. I want to do this so you can see the actual power behind it. Now, I would go back and look at some stocks and the way that they move so you can understand volatility, right? Because you want to get good movers. We don't want something that's just going to chop back and forth. That's not really where we want to focus the 9 EMA. We want something that's going to get momentum, something like Tesla, something like Nvidia, something like even Apple, right? These big stocks, the big caps, they're going to usually get continuation, and the 9 EMA is going to be easier to use with these stocks every single day. Now, for an example, I'm going to use this SPY, and I want to use something that we can look at every day. And most of all, I want to go over something that just happened. So it's not like I'm cherry picking these. I'm just going over some of the biggest plays that we had this past Friday. When we look at the SPY, we can see this is where you open because this is where you gapped. Now, what I want you to look at here is how many times did you actually close below the 9 EMA here on the day? None. This is the 5-minute 9 EMA chart. That's all you're looking at here. And you've had no closes until the end of the day. So what does this tell me? Essentially, every time we've tapped this 9 EMA as support, we've bounced over and over and over, equating for almost a $6 trend flip to the upside here on the SPY. Going over the next one, it's the one we looked at in the beginning of the video. It was Nvidia. Now, when we look at Nvidia, let's just delete a few things so you can get a better viewpoint here. Now, when we're looking at Nvidia, and this is more of an example of looking out for maybe a trade and something that you want to do here. And I'm going to go over exactly the entries and things I'm looking at specifically. But what you can see here is you're coming down into support. We pushed up. We're finding resistance beginning of the day here. This is right where we open up. So we open up. We reject off at 234 over and over, and we push back down. So what you're getting here essentially is a 1, 2, 3 test of this level. And you can see it's operating as support, right? So you're bouncing. But I'm not going to buy when we bounce. And I'm not even going to buy right when we mount the 9 EMA. I'm going to combine this, and I'm going to look at, higher lows, lower highs, everything that's taking place here. So I kind of want to see us break structure and start to flip back towards the upside. And what you can see is we start to mount this level, and from that point, my entry opportunity would be any touch of the 9 EMA for myself. So we break structure, we break trend, and we start to move. And so what I'd be looking for is about right here is where I start to enter, maybe 233.4 roughly, right? And that's not a perfect touch, but I'd probably be aggressive just how we're moving right now. Then obviously my target would be highs of the day. And when I say highs of the day, it's right there, or previous swing highs right now, about right there, right at the open of the day, as you can see, about 235. So from there, we start to push up. Now, traditionally, what we look at, and this is where the 9 EMA comes in handy because it's going to help you and guide you throughout the whole process, is what's happening here. So typically, again, we'd wait and we'd start trimming most of our position as we hit our target. But what the 90 EMA does is it helps you, being able to be a little bit more risky, or maybe trim half or extend it a little bit longer. Because what we're looking for here is a close below the 90 EMA to signify weakness. But what we get is a straight push through, a mount, and then continuation. And we wouldn't actually get a sell signal from the 90 EMA closing below the upward trend all the way until the, maybe 3 to 4 hours later, 20 minutes before the close on the market. But you don't even get a full close. You get one candle, and then the next candle opens right back above, which I'll go into more about this here in a second. And you can see we go all the way to 239. So even if you close right when you got one candle on the 5 minute below the 90 EMA, you still were able to ride this up an additional almost $3 of upside. And that's just one of these cases. Now, a case of a weak signal, or a case of where the 90 EMA tells us maybe we shouldn't trade something like this, or the trend isn't nearly as strong, is we flip over to something like Microsoft. And when we look at Microsoft, I think you get a lot of information here. So this is where you open up on Friday, you gap up a little bit, you push up really strong. I loved it out of the gate, but then you started a trend here. You push back down, you got back up, you got back down, and it's back and forth, back and forth. And I charted this out a little bit on Friday, but you can actually see what's happening. You're making that ascending triangle still here, but it's just kind of not giving you the indicator, right? You're not breaking out structurally. That's why you can't just enter based on the 90 EMA. You got to combine it with everything else. So if we start to break the structure of the ascending triangle, then yes, then I want to follow the 90 EMA. Then I have my entry signal, and then I get my continuation. But as of right now, this is something that I'm watching, not something that I'm trading in comparison to SPY and Nvidia. Now, really simply and really easily, I want to say this right now. The 90 EMA is not an entry or exit signal. More on the exit side, but for the entry, I like to use it with combinations of bull flags, ascending triangles, head and shoulders, whatever you may be using. You're already doing with your chart right now, you just want to add the 90 EMA to it, okay? The 90 EMA is going to help you understand when you're trending so you can make the most money off of that trend, okay? Like we just went over with those examples, you want to use it as a combination with what you're using. I'm not just going to use the 90 EMA when I trade. That's not really smart, but I want to add it into my price action, into my supply and demand, whether you're using MACD, whatever you're using. I'm telling you right now, the 90 EMA will 100% improve your trading. So coming back into Nvidia, let's break this down to give you some of these signals for entering and exiting. Now, you want to listen pretty close because it's gonna change with some of these. Now, over time, I've gotten more disciplined when using the 90 EMA, so that's why I think it's important to kind of watch the update videos I do on these, because there's things that I've noticed that have increased the probability of my success. Now, off the gate, what I want to see is at least a close, and you have to be above the 90 EMA for me to even consider entering about 90% of the time, unless I'm just buying something very low at a very strong daily demand, right? But that's not even about the 90 EMA. But when I'm buying something for a scalping opportunity, we're always going to be above or below. So if we're looking to short, we're going to be below. If we're looking to go long, we got to be above. Now, what I'm looking for here is going to be a touch of the 90 EMA, a bounce, a touch, anything along those lines. That's what you want to see, okay? We want to get some structure of getting like a flag or any type of overall movement. Now, like I said here, I could afford to be a little bit aggressive here on Nvidia based on how it's been moving, okay? Based on where we're at as well and the overall trend and strength that we started to see out of Nvidia here on the day. So we can afford to maybe push our luck, if you will, right? But we've already been above the 90 EMA as well here for almost 30 minutes, possibly even an hour. So those are also things you need to be taking into account. But as we move forward, that's what we're looking for there. Now, when I'm trying to get out of this, that's where things get a little bit more tricky. But at least of what I want to see is a one candle touch on that 90 EMA, okay? Make that extremely, extremely clear. Now, again, what would I be looking for to get into any type of these trades? Structurally, let me tell you, for on the upside of going long, I'd be looking for any type of bull flag, right? So structurally, what will usually happen there is you're trending below the 90 EMA, like right here of what you're seeing. Now, this isn't necessarily a bull flag, so understand that, but it's still a structure of where you're below the 90 EMA and you start to mount back above, right? And so what I waited for here was to get the break out of this bullish downward channel that you were sitting in. Once you broke above and got that touch, granted, we didn't get in at 233. We waited and got in at 233.4. That was the opportunity there, right? You broke structure, you had a bullish breakout, and then you combined it with the 90 EMA. So you could use this with the MACD, RSI divergence, whatever you're looking at there, right? Whenever you start to get that confirmation, the 90 EMA will be the signal or the more precise entry to reduce that risk for you overall. And that's where this really comes into play. Now, when it comes to exiting, I think it gets a little bit more tricky. Now, you can even use this down to the 1 minute to really watch something that's parabolic moving. Like Tesla, when you get those $10 moves, it's really awesome on the 1 minute for Tesla. But what you're looking at here, and why I said this wasn't really an exit for me, is because when I want to get out of a trade, I like to see 2 candles on the 5 minute close below the 90 EMA. I don't want one. I want almost double confirmation to get out of a trade, especially on a runner. And why do I say that? For times just like these, when they push you down and you bounce out of support, possibly even a VWAP is sitting there as well, and you get that continuation. And a VWAP video will be coming very soon because these work perfectly together. Now, going into SPY gives you even more information here, as you can see. And when you're watching here, you get multiple candles very close to closing, very close to, you close right here, and then guess what? The next candle, you bounce right back. And that's why I'm saying you need to have a little bit more space for error, right? Because again, no indicator is going to be perfect. Nothing's going to give you the perfect signal to get in, to get out. So that's why I believe it's so essential. Again, you see this time and time and time again. That's why I'm watching this. That's why it's important. And start just getting familiar with this. I don't want you to start on Monday morning just applying this. Now, it is an awesome tool, and I don't think it's super hard to understand. But I'm going to tell you right now, don't just use the 90 minutes and say, oh, well, Tyler said if we cross above the 90 EMA, we're going to keep going. No, you need to really get into the nitty gritty, understand how specific stocks react to it, and also understand the way you're going to apply this with your trading. If anything, it's going to allow you to make more money on plays and let those runners run. That's the goal of the 90 EMA, but it's also going to improve every aspect and give you confirmation on all your trades as well, which I believe in this game, you need all the confirmation you're going to get. I'll see you next Saturday. The newsletter is also going to be coming out tomorrow, so make sure you get that link down below. Absolutely free, no advertisements, no paid content, 100% free for you, so you're ready to trade every single week. Later, traders.